Millions watch the market rise and fall every day, but only a few know how to predict the turning points. Today, I will show you how to recognize reversal points, signals that appear before major market moves. Let's step into the core concepts and uncover how reversals truly work.
Reversal points are among the most powerful signals in any financial market. They represent the exact moments when a trend slows, weakens, and begins preparing for a shift. Most traders only recognize a reversal when it's already obvious. But the real advantage comes from seeing the early signs while the trend is still in motion. Every major move begins with a clear structure. In an uptrend, price consistently forms higher highs and higher lows. In a downtrend, the opposite is true. As long as this structure holds, the trend remains healthy. But before any reversal, this structure begins to break down. You'll notice smaller candles, fading momentum, deeper pullbacks, and hesitation at key levels signals that buyers or sellers are losing control. One of the most recognizable reversal patterns is the double top or double bottom. A double top forms when price reaches a resistance level, pulls back, and then returns to nearly the same level, but fails again. A double bottom mirrors this behavior at support. What matters isn't the perfect shape, but the message behind it. The market is struggling to continue in the old direction. Support and resistance levels are critical in identifying reversals. A support zone that holds multiple times shows strength, but once it breaks decisively, the market often reverses sharply. The same applies to resistance. A level that repeatedly rejects price can lead to a strong reversal once buyers finally push through. Often, broken support becomes new resistance, or broken resistance becomes new support. This shift confirms that a reversal is taking form. Divergence is another powerful clue. When price makes new lows, but indicators like RSI or MACD make higher lows, it signals weakening momentum beneath the surface. This does not guarantee an immediate reversal, but it tells you the current trend is running out of energy. Combining divergence with strong support or resistance greatly increases reliability. Volume often reveals the truth before the candles do. A surge in volume near the top of a rally can show exhaustion, buyers pushing aggressively but facing heavy selling pressure. At the bottom of a decline, a volume spike can mark capitulation, when sellers panic and stronger hands quietly accumulate. When extreme volume appears at important levels, the probability of a reversal increases dramatically. Not every breakout is genuine. False breakouts, fakeouts are some of the clearest reversal signals. Price briefly moves beyond a key level, attracting traders chasing the breakout only to snap sharply back inside the range. These traps clear liquidity and often drive price in the opposite direction with strength. Market sentiment also shifts noticeably near reversal points. At the end of strong uptrends, optimism becomes extreme. Traders feel confident, news is overwhelmingly positive, and many people believe the trend will continue forever. This is often when risk is highest. During deep downtrends, fear dominates, and even good news is ignored. Ironically, this is when value begins to appear. Understanding sentiment helps you avoid joining the crowd at exactly the wrong moment. Zooming out to higher time frames provides essential clarity. What looks chaotic on a short chart may reveal a clean reversal structure on the daily. Before acting on any signal, always check the larger picture. The strongest reversals occur when multiple time frames align. A pattern on the lower time frame supported by major levels on the higher one. No signal is perfect. Reversals can fail and patterns can break, which is why risk management is non-negotiable. The goal is not to catch every turning point, but to recognize the highest probability setups, manage position size, and protect capital when the market proves you wrong. As you develop the ability to see reversal clues early, weakening structure, fading momentum, divergence, volume extremes, and shifts in sentiment, you'll begin making decisions with more clarity and confidence. Your job is not to predict the exact top or bottom, but to understand when the balance of power is changing and position yourself accordingly. This is how reversal points reveal themselves, not in sudden, random movements, but through patterns, signals, and behaviors that become clearer the more you study them.
Thanks for watching InvestWave TV. I'm glad you joined us today. If you found this helpful, make sure to subscribe and hit the like button. And don't forget to turn on notifications. See you in the next video.